Good morning, everybody. This is Seth David, and this is our webcast for April 15th, 2009. Happy Tax Day. Hopefully you've got your tax returns done and filed. If not, if you need some help, give us a call. We'll help you get your books ready and make sure you can get that return filed as soon as possible. And of course, if you haven't filed it yet, make sure you get your extensions filed today. In the meantime, I wanted to do a special webcast in honor of Tax Day, and I figured it'd be appropriate to have it have something to do with QuickBooks and accounting and bookkeeping. So with that in mind, I'm going to go right into our special sharing screen and let you see what I can show you in terms of my tip for the day, which is going to be on QuickBooks, and we're going to walk you through how to use a template that I've created to help better manage your inventory. So this is obviously a webcast for people who have a business where they sell products. And the first thing I want to do when I'm doing this is I want to run a report based on my product listing. So let me wait for my test screen to catch up here to make sure you can see what I'm showing you. And then we can get started. I suppose I should actually share my computer screen. This would probably help things along. And now that that's done, you can see QuickBooks. And as always, this is a sample company file. So we're going to go to Reports, and we're going to go to our lists, and we're going to do an item listing. And once I do that, it gives me some basic preset columns that one might typically want to see on an item listing. But now we're going to go over my template. And incidentally, this is a template. Obviously, if I'm showing you this webcast, I'm willing to make this available to you. If you've watched this webcast, just email me and say, I watched the Tax Day webcast, and please send me the inventory template. This is a template I've created in Excel that allows you to start with the information that you can get from QuickBooks, but then it allows you to enter updated information. It allows you to enter a current quantity. It allows you to enter a new cost if you feel that costs have risen and you want to reflect a higher cost because QuickBooks average costs your inventory. You may want to show it based on more recent costs, so you may want to increase the cost of your inventory. And for that matter, you may want to update what you sell it for, your wholesale price or retail price as the case might be. In other words, whatever price you resell it for. So this tells us what columns we need, and it's just the first few before we get to the input section. The input section is the section that's noted in what appears on your screen as kind of an orange color here. So we need the item, the description, the type, the quantity per QuickBooks, and the cost and the price. So now let's go back over to QuickBooks with my Alt-Tab, and let's see what we've got. I have my item. I have my description, I have my type, I need my quantity next. So I'm going to go over here and grab the quantity and drag it over. And then I have my cost and my price and everything else I don't need. So I'm going to get rid of it. See you later. And what you can do, of course, if you're going to start using something like this and you're going to want to do this frequently, you might want to memorize this report. Give it a little different name. So we go to Modify Report. And there's another thing we want to do. Because we're dealing with just inventory, then I want to filter my report for only inventory parts. And click OK. And again, I'm going fast because there's a lot to cover. If you want more information on this, of course, contact us, and I'll be more than happy to set up a training with you. And of course, you can watch this recording as many times as you need to in order to sort of get it all. So now that I have this report in place, I'm going to export it into Excel into a new worksheet. Then I can grab this information and simply copy and paste it. And I want to paste the values. So I copy that and paste it into my template by choosing Paste Values. In Outlook 2000 or Office 2003 rather, Excel 2003, you want to choose Edit, then Paste Special, and then choose Paste Values. Now once this is in place, what I may want to do is just take this information and again paste the values over into the section that's meant to be the updated. This way we have it all in agreement. But the way this works is that I've written some formulas in here that compare what's in the updated section to what's in the original section. And so long as what's in the updated section is anything different from what's in the original, then it uses this information to calculate your total cost, your total resale, your expected profit on liquidation, and of course your profit margin. And this is a profit margin per item, which is very valuable information, and QuickBooks doesn't show you this. So you do it in Excel. Excel is a great tool to use in tandem with QuickBooks. QuickBooks is what lets us track and manage the financial information. Excel is what lets us really then analyze it, and analyze it to no end. So now let's say I want to make sure that every item is sold at a rough profit margin of 40%. Well, now I can go through and adjust my wholesale or resale prices. So I want to do 5 here. Let's call this, if I'm selling them for $1,500, I want it a little less than $3,000. Let's call it $2,800. That's a little high. Let's do 25. That's perfect. A little less than 24 in this case. Let's call it 18. Too low. Let's call it 20. Perfect. And I'm doing this on purpose to show you how to kind of think this through, but I do have to go quickly. These will be 5. This is a little too high, I think. Let's make this 25. This is way too low, so I want to make this about 60. That's fine. This I'm just going to ignore. This is, see, here we have a problem, and again, by doing this analysis, I can identify it quickly. I'm selling these things for a lot less than I'm paying for them. That's no good. I'll sell them for $1,000. And let's drop this one down to, say, 60. Now, once I've got this in place, I know that I've properly updated my pricing. I have 2 things I need to do. One, I need to go back and adjust my inventory. Let's assume now that some of these quantities change. Let's say that these cabinet pulls, I actually had 424 of them. And let's say here we only had 5. Here we had 22, 240, so on and down the line. I'm going to update my quantities based on my actual count. And once that's done, then I need my quantities and I need my total cost in order to complete the inventory adjustment. So we go back to QuickBooks. And then I go to Vendors. And then I go to Inventory Activities. And I want to adjust the quantity or value on hand. So I go into this screen. And I want to make sure that I look at the very bottom left to where it says Value Adjustment. And I go down here and I check that off. So now I can enter in the updated quantity, and this is the updated aggregate value, not the unit, not the cost per unit, but the actual cost total for all units on hand. And literally I can go through here and I can copy and paste from my Excel template. And I can go down the list, and this is how I'm going to post the adjustment. And one last thing, the account. The adjustment account should be a cost of goods sold account, and I like to actually create an account called Inventory Adjustments, because by posting it to Inventory Adjustments, I can run my P&L on a monthly basis and I can see exactly what's going in here. And if I see that consistently every month there is significant amounts going in here, then it might clue me into the fact that I may have a problem. I may have a situation where somebody's walking out of my warehouse with inventory. If I'm constantly having to reduce my inventory quantities every time I take inventory, it could be an indication of that. It could be an indication of another problem, but either way I have my my control in place that lets me see and alert me to the fact that there might be a potential problem. And that's where this becomes really good information. First and foremost, it's good information to make sure that I have my inventory accurate and up to date, but then secondly, and also just as importantly, by having this tracked in the manner that I'm describing, I'm able to actually look at it on a month-to-month basis, and I should be taking my inventory every month if possible, certainly no less frequently than twice a year in June and December. But ideally I want to take it every month, and I want to have a look at this account, inventory adjustments, and see, is it accumulating? Am I having significant costs? Theoretically, if it's just a matter of your typical shrinkage, then I might lose some inventory items one month, and in another month I might be short on counts for some reason, but it should kind of average out over time. But if I'm consistently having to adjust inventory downwards, which is going to result in an upwards adjustment of my cost of sales, then something could be wrong, and I want to take a look at that. I want to ask myself, why is my inventory walking out the door apparently? And there might be a very good explanation for it, but at least I'm clued into the fact that I need to check into it and find out. And that's why it's so important, because inventory can be a substantial weakness in terms of a company's internal system of controls. And so you want to do as much as possible to put emphasis on focusing on this and making sure that it's accurate and making sure that it's monitored. And moreover, if your employees see that you're monitoring this, because they see that you're checking your counts and looking into these things, they're going to think twice before they think about taking something. So that's my tip for the day, tip for the week. Please check back with us next week, and if you'd like more of this or more great information, visit us on the web and visit our Learning Center at www.nerdenterprises.com, and contact us if you want direct private one-on-one training, and we can do that, and we can record it for you, and it'll look just like this. We'll spend an hour and a half with you and do the training and answer your questions and give you whatever information you need to teach you QuickBooks, Excel, or any number of other things. Go to our website and visit the Learning Center today. Have a happy tax day.